So good morning, everyone. It's Elaine here from SDAX. I'm in London, so it's 3 o'clock in the morning. Hold on, I just have one more person joining. And just wanted to kick off this call. And we have here on the call the team from Artory, Winston. We have Nanne Dekking, Peter Lucas, and then we have Liz von Habsburg, Jack Muir on the call with us. And we wanted to go through with you the Artory Winston, I would say, art educational program. And we should kick off with, let's just kick off with what SDAX is about. So SDAX is a Singapore regulated investment platform backed by the likes of Temasek through Port Singapore Authority, ESR, the largest listed real asset manager in Asia, with 140 billion in assets under management, and Straits Trading, which is the oldest, or one of the oldest conglomerates in Singapore. We curate investment products on our platform, and then we fractionalize them so that they're accessible and so that we can democratize finance. And we use blockchain technology to the investments so that way it can be traded as well on our regulated exchange. So for that, I think we're all here because all of us have a big passion or an intersection of really the passion between art, finance, data, and technology. And I, for one, graduated from Harvard with a minor in art and economics. And Liz graduated from Stanford and Columbia in art and bombs. So I'll let her clarify that for you and get started on the introductions. Liz, would you like to start?
I would, absolutely. I'm Liz von Habsburg. I'm Managing Director of Winston Art Group. To give you a little background on Winston Art Group, we're the largest independent art advisory and appraisal firm in the U.S. At this point, probably worldwide. We have 8 offices in the U.S. and 3 overseas. And in terms of our business, just a quick overview, we do about $10 billion worth of appraisals every year. We transact hundreds of millions of dollars of art and other collectibles. And we're independent of any auction house or dealer, so we're working directly on behalf of our clients.
Thank you, Elaine. I'm Nanne Dekking. Liz and I go back. I have to chuckle here because Liz and I go back for many years, but now I see that you have my name all of a sudden, Nanne Dekking.
Yes. I'm going to rename
you guys
myself.
are in the same house.
Anyway, the Nanne Dekking with the red scarf is Elizabeth von Habsburg, and I'm Nanne Dekking. Very, very good to see you. I see some familiar faces popping up, at least the names of people we have already met in Singapore. We had an incredible time in Singapore, all organized by SDAX, very professional team. And as Liz already alluded to at the very start of when we started talking, it was definitely one of those events where you feel that you are embedded in not only a professional team, but also professional teams which knows a lot of interesting people and good contacts. So we will be back soon. I'm the founder and CEO of a company called Artory. We are a collection management company, very much geared to art and geared towards art and collectibles. I founded the company after a career in the art market. I moved in 1996 from the Netherlands to start a small company that was completely focused on due diligence and provenance issues in the art market. It's definitely something we can talk about later in this talk as well. As you all know, provenance, clear title, all these kind of issues are incredibly important when you acquire fine art. And I, at a certain moment, started to be one of the leading dealers in the world in French Impressionist art, working initially by myself, then the Wildenstein Company, and at the very last part of my career at Sotheby's as vice chairman and the worldwide head of private sales. Maybe we keep it to that for now.
Okay. I think what I can do as well is actually just fill in some parts that, like, the two of you are too modest to talk about, because it's quite hard to talk about ourselves, actually. So I would like to say that, first of all, the reason why SDAX works with Artory Winston is because I found them while going through Citibank's research report. And at the time, Citi had put a research report on Artory and Nanne Dekking and the technology he uses, and the very fact that he is the owner, holder, manager, and developer of the world's largest public transaction database. And because of that, then I hounded Nanne because I wanted to work with them and the fund that they're raising. And that's where we met Liz von Habsburg as well. And Liz, in her own right, is the world's largest independent art appraiser. And as it is, she's already powering the art departments of 5 of the major private banks like Goldman, Citi, Morgan Stanley, BAML, and one more, JP Morgan, and the 3 largest insurance companies that deal with art. So from there, then that's where the magic happened. And it took us maybe working through 24/7, at least 6 months to get the fund onto our platform so that it can be democratized and so that it can be accessed by everyone, so by accredited investors. So I think with that, maybe we can just talk a little bit about sort of Nanne from your side, the technology side, because I know you started from like one side of it being the junior curator to the Dutch royal family, and then that was not fun enough for you that you had to go to New York and meet Elizabeth von Habsburg almost 25 years ago.
Well,
or more.
that is. Well, let's not say more. Let's just keep it at roughly 25 years. That's more than enough. Yes, I have to say, being an art historian and having started in a more scholarly job with indeed the Dutch royal family, I always realized how important domain expertise is. And I believe anyone here on the call will recognize that if you have domain expertise, you also recognize easily what you don't know, and that you sometimes need a specialist in a field that you're not really familiar in. So my field of expertise, besides portraits, hence the job with the Dutch royal family, 18th century family portraits, was French Impressionism. And that has always been my passion. It's actually a painting by Claude Monet, Garces and Lazare, that was in my history book when I still lived in the Netherlands and was at high school. That intrigued me so much that I really started to be interested in art, and that started my whole career and in a way pivoted my life. And so I moved to New York in '96 to start that company that I already mentioned, doing a lot of due diligence and provenance issues, dealing with provenance issues. And that's when, exactly at that time, I also met Liz, and I realized that someone like Liz and her group, we see Jack Muir here on the call as well, who's actually a specialist in the head of the emerging artist group, and really heading a team of specialists in his field. I realized how important independent appraisals are and independent due diligence done by people who don't have a vested interest in attributing a value to an artwork. And that for me was one of the biggest context I had that started to make sense when I realized that there was such a technology as blockchain and tokenization. And in my career, building up collections for people in the field of Impressionist art, I was lucky enough to have met someone from the world of technology, and his name is Hasso Plattner. It's public knowledge, otherwise I would never talk about someone like Hasso Plattner or any private client. But this can immediately be Googled and you will see exactly the same information because a lot of people wrote about it. But Hasso Plattner is one of the founders of SAP, so someone who really understands technology. And he became one of the largest collectors in the world, as you just said, Elaine, but definitely the largest collector in the world in the field of French Impressionism. And his collection can now be seen outside of Berlin, in Potsdam. Everything is publicly visible for people. It's a private museum. And that became such an important collection. But he also became a very important sounding board for me. And he said at a certain moment, and that opened my eyes, he said, Nanne, there is a new technology called blockchain, where every kind of third-party validation that you always use when you try to sell me a painting You never say, I think you should buy it. You say, the Metropolitan Museum has actually shown the piece in an exhibition, or the work is heavily published about by scholars in the field, independent expertise. He said, independent expertise is what we can capture, third-party validation, using blockchain, make it immutable, make it only accessible on a permission based. And that was the start of Artory, using that kind of technology to tokenize trust information, as we call it, coming from trusted partners about fine art. And that led, of course, as you can imagine, to a very natural relationship with the largest independent art appraisal firm in America, with Liz and the team. Because when they make statements, they are for anyone looking for independent information. Of course, creating statements that are very valuable in the sense, not valuable in the financial sense of the world, but at least giving a lot of trust in the artwork that you want to engage with or that you want to acquire.
Thank you, Nanne. And in terms of just jumping in, how would you, because you had a relationship like the way the Russian art collector, that I can't pronounce his name, Rybloblev, yes,
Yeah.
yeah,
Right.
with Yves Bouvier, and how that ended up in so much scandal, but just because, the amount of money that you're looking at when it comes to like art like these, right, tempts people and tempts, people that's in between, tempts people where agents, brokers, and, tempts people to collude, for example. Like, I know you wrote an op-ed on the case against Sotheby's. Could you tell us a little bit about, how that sort of is different from like how your relationship was with Nanne, with Hassel-Plattner?
Right. Well, I never dealt directly with Grigoriev in those days at Sotheby's. He bought most of the pieces with intermediation of Sotheby's before I became the worldwide head of private sales. I was definitely aware, of course, of him being a big collector, and Yves Bouvier was someone who we all knew in the days that I was still at Sotheby's. What I read about the case, because I have to read about the case as well, is that indeed the fact that it's not completely clear, and it wasn't completely clear, what was the intermediation of Sotheby's? Was that completely independent? Were they either working for who were they actually working for? And who attributed value to those pieces at the moment that the person who was buying them wanted to understand the value of these pieces? And that is, in the end, something that should be unnecessary. I'm not naive. I know the market so well. Liz knows the market very well. Nobody is saying at Artory or at Winston, everything should be public about the sale of an artwork, right? There are many reasons why prices should be kept private. There are many reasons why ownership should be kept private. Why would all your assets, because it's art, all of a sudden be public? But what you can do is you can create attestations that are actually part of the token, all the information that's on the blockchain, where you can actually see who was the third-party validator who gave an independent valuation on the piece. Or you can also find out legal ownership of the piece. Has there been a legal counsel involved who actually created an attestation that the owner had clear title when they sold, etc. All that kind of information that gives you the reassurance that you're acting upon information that you can trust can be tokenized. And let it be clear, it doesn't have to be public. I mean, Liz and the team create a lot of information for artworks that we put in our diversified art fund. Diversified meaning art coming from all kind of different time zones, etc. But Liz will talk about that. We tokenize on the asset level all that information that Liz and her group gather about these artworks. And as the investor, you can see an attestation that you know at least that people who have domain expertise have inspected the works, have done an appraisal on the work, that there was even a secondary appraiser involved to make sure that when Winston Art Group sources artworks, that there's a secondary appraisal being done. And all those kind of levels of due diligence can actually be tokenized. And in the case of Grigoriev, that could, of course, help the buyer of these pieces tremendously. And moving forward, I actually think we will go to a world where these kind of scandals will not happen anymore, or shouldn't happen. And if they happen because you don't really want to trust the kind of technology that's already in place that makes it unnecessary to make these kind of mistakes.
Can I jump in, Jane?
Yeah,
Shall I
definitely.
jump in? Yeah,
Yes.
just to say, along with what Nanne said, which is so true. I've always been a huge proponent of technology, and the art world has always been a very opaque asset class with a lot of shenanigans going on behind the scenes. And that's something you alluded to, Elaine, with the Rybolovlev case. And because Nanne's team has incredible technology to tokenize works on the blockchain, we were immediately attracted to working together with them in order to take the due diligence that we do for every single work of art, 50 points of due diligence for every work of art that we are telling clients that they might want to take a look at, or indeed for our fund, that that information can be tokenized and put on blockchain so that the clients have a much clearer idea of what this work of art is, and can take that opaque art world and make it transparent. That's our goal. We don't want complete transparency in everything. We don't want to know who owns what. We don't want to tell anybody those kind of things. We do want clients to feel comfortable that every work of art that we recommend for our fund or for any other reason is something that they can feel completely comfortable with and trust fully.
Yes, and I think in this art fund that you guys are putting together and that we've launched actually is a very diversified one anyway, because you're looking at a lot of emerging artists, mid-career, and then blue chip. Because as I was due diligencing other platforms and other funds out there to put on Aztecs, for example, we came across quite a few that, were very interested in attracting people using, an iconic piece only. So even as recently as today, I got a newsletter from one of these competitors that basically said, oh, we just tokenized a Picasso. This is great. Like, we can own a Picasso now. But in terms of the valuation that they bought it at, for example, right? I find it a little bit gimmicky, just because, where if you have art expertise, you really do want to get to the identifying of talent and understanding using data science, right? Understanding the trends for these mid-career and emerging artists. So Liz, for example, recently you were at Miami Art Basel and you picked up a lot of pieces, and these pieces weren't crazy expensive. And we'll go through some case studies as well, where you can see, with the sort of understanding the human perspective, but with the data science behind all this, right? With the 50 points that you have to meet before you buy a piece of art, and also your your relationships with these galleries, whereby a lot of times you can skip certain wait lists for hot emerging artists. That is where the real value comes, and that's where the alpha is generated from the art fund. So what I'd like to understand from you, Liz, is over the years, how do you keep yourself and your name, right? Because art is so opaque and it's rife with so much scandals, for example. Just to be in the business for 25 to 30 years, right, without a hint of scandal is actually quite hard. And you must have seen a lot of colleagues getting embroiled in, again, controversies, I'll call it.
Yes, absolutely. And clearly, I think everyone on this call knows that what we all have is our reputation. So that is first and foremost something that you can lose quickly in the art market by doing something that is not clear and transparent. In terms of the fund, what we're really trying to do is we're trying to create a vehicle that is safe and that we are very confident will return the kind of returns that will make this asset class really, really wonderful and really something that people want to invest in. So we're looking at a basket of works that will diversify the risk across a number of different categories. And Elaine mentioned emerging artists, which are the artists that are just coming onto the market, that generally have one dealer that is promoting their work. And then there's mid-career artists who may have an international dealer representing them, or an American or other location dealer representing them, and have maybe a small secondary or a decent secondary, which is an auction market. And then there are the blue chip artists who have a robust secondary auction market, and then a number of different international dealers representing them. So this is this is a way to mitigate the risk if somebody wants to invest in contemporary art. This fund is all contemporary art. And within each of those categories, we're looking at a wide diversity of types of artwork, and Elaine mentioned, Nanne mentioned geographic location of artist, so that we can really bring our knowledge, our 50 points of due diligence on each work that we're going to recommend is included in this fund. And by the way, we don't make those decisions at Winston Art Group. We turn over those 50 points of due diligence to the investment committee, and they have to do the decision based on our recommendations, whether or not the fund will invest in that work of art. Plus, we're getting, as Nanne mentioned, a third-party appraisal to make sure that our thinking is in line with reality.
Yeah, and the way we look at it is that the art fund will be valued on a quarterly basis, but at the same time, on an annual basis, will be valued by an independent appraiser anyway. So that way it keeps it. And then the art in itself, once bought, will be custodied where? Because that's very important as well. When it is a real world asset and when it's tokenized or when it's put in a fund, we just want to ensure that, the insurance side, like all this is actually like clearly stated.
Exactly. So the works will be held in a Freeport in Delaware, in a safe, very wonderful art storage company called Wovo.
Yeah, and then
Nanne,
we're even looking at a location, also a Freeport in Singapore, for pieces that will be acquired in Asia. Maybe one thing to add, Elaine, all the things that you've just mentioned are indeed the case. But what I also want to add, since this is a fully regulated art fund, it's the first fully regulated art fund. There's even an official fund administrator, not just a fund administrator, but it's Apex, one of the largest fund administrators in the world. They impose a lot of what you just said on us, because we are just any other funds that they take on, most of them equity funds. And they want to regulate us exactly the same way as any other fund is regulated. Hence, the two-tiered decision-making. Liz and the group advise. Another committee looks at all the information, also based on the secondary appraisal, and then says, yes, this can be acquired by the fund. So there are so many checks and balances in place that for sure don't exist in the art market, but also don't exist with any other art fund so far.
Yes, and on top of that, this is also fund administered by Apex. And in itself, it's a validation because they won't just work with anyone at all. One of the things that maybe we can go to before we go to questions as well, because time just runs out so quickly. I know all of us have time, so we can stay as long as we want. Maybe we can also go to a couple of case studies with Jack Muir, who's a specialist at Liz's group. I've worked with him actually because a couple of my clients had certain works. And I have to say, like the kind of detail that he came back with and the comparables to make sure that, he's giving a very, let's say, neutral response. I was very impressed. So over to you, Jack, maybe. You want to maybe introduce yourself, and then we can put the screen onto the several case studies that you've looked at. That would be something that can be repeated in the fund.
Thank you so much, Elaine, for that introduction. That was very lovely, and it's always a pleasure to work with you and the SDAX team. My name is Jack Muir. I work very closely with Liz von Habsburg and Nanne Dekking. I'm the Senior Director of Advisory at Winston Art Group, and so I handle all the transaction work that we do with our private clients and managed accounts. That includes the buying of all fine art, contemporary, impressionist, modern antiquities, and so forth. And then all of the tangible property as well, including jewelry, collectibles, it really runs the gamut. And then also all of the deaccession strategies. And we really think that these are two important aspects to the success of this fund. So should we pull up the slides?
Yep, Chester, number 5.
Great.
Yes.
Perfect. Okay, so these are two really great case studies that we love to talk about and share because these are really prime examples of what we aim to replicate with the fund. The painting on the left over here is a lovely painting by an artist named Maria Berrio. She's a Colombian artist, born in Colombia, now based here in New York. We had been following this artist for a while before recommending her to a private client. And we saw an opportunity present itself in late 2019, if I remember correctly. This artist was exhibiting with a small gallery based in New York. The work was getting a lot of very positive press, but there were still some works available, and we were tracking this gallery and the exhibition very closely. As we were learning more about the artist, we started to hear some whispers on the market that she was going to be picked up by another major gallery with a significant international presence. And that's the kind of information that we get because we're so active in the market and we're constantly hearing. And that's also the kind of information that has a significant tangible impact on the value of artworks. So we recommended this artwork to the client. We purchased this work for a little under 14,000, about 13,500 or so, in December of 2019. And very quickly, by early 2020, it was announced that she had been moving to this big gallery in London called Victoria Moreau. And suddenly the prices went from about $14,000 to about $60,000 to $80,000. So already there's an initial jump in value there. What we saw also is that artists can only make a certain amount of works per year. And so quickly, because of this big move in her market, there was an immediate lack of supply in the market. And so what happens is that people seeing an opportunity here started putting the works up for auction. So we went from the primary market to the secondary market. And the secondary market here became the only location where one could theoretically purchase one of these works. That created a significant boost in her secondary market prices. And all of a sudden, we started seeing works sell for 200,000, 300,000, 400,000, and it just kept on climbing. We monitored this market very, very closely. And with the client decided that, the market is peaking, this is the time to sell. And so we put the work out for sale in October, November of 2022 at auction with Phillips in London. And the work sold for over 75 times the original purchase price, just a little bit under about $1 million US. So a really significant jump in price. And this is something that we've been able to replicate with a number of other artists and artworks as well for our clients. The painting on the right is a really fantastic work by a Japanese artist named Tomokazu Matsuyama, who's now also based in New York. This is an artist who had a very quick rise. He's been quite established in the market, has been around for many years. It was really his move from Japan to New York into the US market that helped propel a lot more interest. And we'd been looking at this artist for a while without really being ready to purchase one for one of our clients. Finally, we found a really great work, but when we came up to the gallery, we realized that there was a significant wait list, more than about 50 people on the wait list, including some pretty significant celebrities. Because we have a relationship with this gallery and we'd purchased a large number of works from this gallery previously for this client and other clients as well, that gave us the priority access. And so we were able to bypass the entire wait list and essentially have the pick of the works that we wanted for our clients. This was really a unique opportunity, and this is a work that has continued to grow in value. The client continues to own this work, but we do regular updates on the value of this work, based on the market data that we're getting, on the secondary market data that we can also have access to via the Artory information. And we continue to see a significant growth in value. Both of these, identifying those opportunities early on, getting the priority access to those works, and then identifying the proper sales strategies is really the key to how we see the fund moving forward.
And this is what I love. And this is how you get to your sort of like VC-like returns when it comes to emerging artists. Because even coming back from Miami Art Basel, I remember, Liz, you had a whole list of artists that you had acquired in smaller price ranges. And I was quite impressed that, you know, they came from Yemen, 2 from Singapore. I remember 1 from Abidjan, for example. I mean, it's quite varied. And to get this kind of diversification that's uncorrelated to the financial markets is where, you know, we find, for our clients at least, it's very interesting to at least get that accessible, accessible ticket into an art fund that allows you to tap experts like Liz and Jack, and then also the data science and the tech that you get from Nanne and Peter and his entire team. So that part, like, if you go to the next page, for example, I just wanted to touch upon one more thing, which is that if you look at Hasso-Plattner being advised by Nanne Dekking, and him being, how many pieces did you guys end up buying together? I think it was 100, was it?
Well, many. I mean, if you go to the museum, you will see them all. I was very instrumental in the beginning. Of course, ultimately, that became a whole machine of people involved in advising and doing research. As he says himself, that I was the guy who created the addiction to Claude Monet. That's for sure. Yeah, it's an incredible museum. If anyone is ever in Berlin, go to Potsdam. It's called the Museum Barberini. Spend the whole day there. It's an incredible collection of French Impressionist paintings, but also post-Impressionist all the way to Munch, and even modern art like Anselm Kiefer and all that. It's an incredible collection. But one of the reasons why I actually enjoy it much more to listen to Jack is the emerging artists have, of course, an incredible upside. Whereas on the side of the French Impressionist, indeed, with a lot of domain expertise, but really knowing the market super well and even know who will bid at auction, for example, just know who are the 3-4 parties interested in a piece like that and who can afford it. That makes it a very risky investment for a fund. It's great if you are a millionaire. Well, actually, you have to be a billionaire to buy Monets, but if you're a billionaire, fine. And of course, Liz and I will make sure that people who make those kind of decisions at that echelon of the market will make a very well-informed decision. But if you spend the money of investors, we don't think this is what you should do. Definitely not fractionalize a single piece of those, because then you even take more risk. So we do buy for the fund, or Liz and the team advise for the fund to buy sometimes works at a higher echelon of the market, 2, 3, maybe sometimes $5 million. But there we have to be absolutely convinced that it's not too risky. And then the rest of the portfolio can even act as a buffer of risk mitigation if that work does not go up in value a lot. This is basically the page with the risky the risky art. The Madonna of the Yarnwinder was definitely involved in the sale of this painting. It was sold at the time as Leonardo da Vinci and Workshop, et Atelier. And then you deal with an artist where there are only 3 scholars in the world who can have an opinion on the authenticity of the piece. And the ultimate decision is always made by the Louvre and the curatorial staff over there. And 2 years, no, what was it, right before COVID, 4 years ago already. With COVID, you always forget those years. 4 years ago, there was a Leonardo da Vinci exhibition at the Louvre. And Vincent de Lieuvin, the chief curator of Italian art, included this piece in the Leonardo exhibition, which is the ultimate reassurance, right? This is the ultimate blessing that you can get.
Yeah.
And they incorporated the work as Leonardo da Vinci et Atelier. Again, not for a fund, and definitely not something to fractionalize. That's not democratizing art, what people sometimes say. First of all, democratizing art in a painting that was bought on the market and not off market. Liz and our group don't have to buy at an auction. They don't have to scream, oh, we've got the work and it's in the fund. No, they know how to get pieces off market, which is not only good for the piece, because the upside when a work like that will be much higher because it's completely fresh to the market. But more importantly, there are also no crazy auction fees involved. that already takes away 20 points of the profit you can make on a piece after 5 to 7 years when the artworks will be sold. So let's say that this page maybe reflects deep knowledge of the market, but these are definitely not artworks that we would recommend anyone to solely invest in, and definitely not artworks for a fund.
And I totally agree. I couldn't agree more because Nanne, when we were doing our due diligence on which art platforms and which art funds that we wanted to list as we curate for SDAX, right? One of the things that we ran into, for example, were art funds where they were left over from family collections that couldn't be sold, for example. We ran into people who had large art, let's put it this way, fractionalization or exchanges that fractionalize art, for example, but they put together funds because they couldn't sell pieces of their entire collection. So then they had to have a fund together to be able to sell the rest of the pieces. And these were parts where we thought, okay, there's a major conflicts of interest here. And this is where, I fell in love with what Liz does with Winston Art Group, which is that they really they want to be independent and they keep everything independent. But on top of this, for this art fund, what I understand as well is that, you're not charging fees on the buy side and sell side advisory too, which is already a plus for us.
Yeah, the fee structure, but most likely there are some people already who invested in the fund on the call, but those who will not yet, they can always go to Elaine and her team to get all the information on the fee structure. Sorry, Liz, I was interrupting you. Sorry.
No, absolutely right. No, I was just mentioning that to sort of reiterate that point because it's a really important one. Obviously, what we're doing here for this fund is we're creating value, and when you're investing in this fund that we're putting together, you don't have the kind of fees that you do with other funds, and even when you're using an advisor to buy outside of the fund, those fees do not exist in this scenario at all.
Yeah, and like the way we see it is actually we kind of like got your services for free, so we're kind of grateful. In a way. So I mean, because otherwise, as clients, because business as usual for you include advisory on the buying and the selling independently, but it also includes portfolio management, like collecting art on behalf of your clients. So you already have your track record of 2 to 3x in 5-6 years, for example, that you have created value for your clients. So you know how to do it. And we're just sort of like tapping that for free. So I feel good and bad at the same time.
You should feel very bad, Elaine.
Okay. Then as an Asian person, I want. I think I'd like to open to questions from the audience, because I know regulatory-wise, we cannot speak about the fund terms and things. Right after this call, what I'll do is I'll send you guys a thank you note and a follow-up as well. And then that way, if you're interested, it'll be a reverse inquiry. And then that way I can send you all the details about the art fund. But should we open to questions and see if anyone has any questions?
Yeah, maybe quickly, and in one thing, Pete
Yes,
looked
definitely.
he would actually the answers that we cannot talk about because he is our chief investment officer.
I know he has to be muted entirely.
He will be muted, but he's not muted because he's not allowed to say something. But it's just the theme that we're talking about.
I mean, the poor guy.
They expected anything I spoke about would be investment or fund term related, and so they were like, just keep Sam.
Exactly.
I didn't even know we gave you a mic.
Yeah, we should just blacken him out. But I think the point here
but rest assured that the whole regulatory framework and the whole all the fees, etc., it's completely transparent, and Pete and the team did a tremendous amount of work.
And third-party valuations, to be sure, and quarterly valuations on the NAV. Yes, we have someone, Mr. Jain. Hi.
Yes, hi. Very nice information I got now. I will not ask anything which is going to be a regulatory restriction. So I'm aware of what you are saying about it on the funds structure or the term. My question would be on the risk management of the investment. And also the second question is is there a cycle in the art investments, like what we find a cycle in the normal other asset classes investments? Is there a cycle in, these are my two questions. If you can just give me a little bit more on those things, that'll be
That's a
helpful.
really good question, actually.
Thank you.
Can I jump on the cycle part?
Please.
Yeah, because I think that's really interesting and something I actually wanted to mention, and that is, yes, there are cycles in the art market, not necessarily correlated to the stock market, but the art market is affected by geopolitical happenings, and it's also affected by interest rates. And we saw last year in the US, certainly interest rates were very high, and we had some softening on the auction side of the market. For us, putting together this fund, this creates a huge opportunity for us because there were fewer buyers, so both the dealers and the auction houses were suffering. The dealers were much more eager to sell. So when we were at Art Basel down in Basel in Miami in December, we had done our first closing. We were able to buy works of art, and the dealers were very anxious to give us discounts that were below market value because they hadn't done so well at the art fair because of these economic and political factors that were going on worldwide. So yes, there are cycles. We find that the market is extremely strong in the areas that we're collecting. So emerging art has been extremely strong, although we got great deals when we were at Art Basel for the reasons I just said. So we feel really comfortable with that. Same thing in the mid-career and the blue chip areas. We just bought a wonderful, for the fund, a wonderful mid-career artist at below market value, again, for reasons that the owner had purchased the work and needed to raise some funds given the global market. So we're finding opportunities in this cyclical, difficult market right now.
Yeah, exactly. Maybe one thing to add is about the auction houses, because everybody always looks at the art market judging what's happening at the big auction houses, Sotheby's and Christie's. Those are the only two houses they look at. Even journalists for newspapers or financial newspapers. The two auction houses very much reflect when they do very well, when they have a really good year, is what's happening at the highest echelon of the market. If there's an estate like the Paul Allen estate last year at Christie's, that reflects a lot of the revenue that such a big auction house makes. So if there's not a big estate, or if these or if there are not so many people buying at the highest echelon of the market, as Liz just described, for what kind of reasons, then the perception is that the art market has crashed. Where there are many echelons of the market that haven't crashed at all, or as Liz just said, emerging markets have actually gone up. So it's very much understanding the market and how people come to conclusions, basically based on what the two auction houses are doing. I
And
see
I
a
think
good coming up on the right, actually, right?
yes,
Mention
exactly, as well. Yes,
Yeah.
but I think Mr. Jain had two questions. We were very excited about the cycle of the art market. What was the first question again? It's 4:00 my time, so I'm allowed to forget.
Yeah, the question was related to the risk management and the liquidity
Yes.
for investors.
Yeah, so risk management I spoke a little bit about before, and that is we look at each of these categories, emerging, mid-career, and blue chip, and within those markets, we're buying a diversified group of works, diversified by, as I mentioned, by a country of origin, by gender, by type of work. So we're mitigating risk that way. And using those 50 data points that I mentioned before, we're only buying works of art that we feel confident are going to go up in value at the rates that we're looking to achieve in this fund.
And what I like is because you're actually talking to, in between me, at least from my screen, world's largest holder, manager, developer of the world's largest public art data transaction database. And then on my right side, you have Liz, who has private data transaction database. And what that means is that they are able to also use, the data science of it and the predictive science of it to look at trends. And that's quite important when you have these sets of mega data that we're looking So this is where, the tech meets the art and, the human astuteness. This is where we create alpha. Now, let's just go back to this question that's actually very important as well, from Lillian. How often are we informed of the pieces that are bought and sold? And are we informed of every piece that is being bought? And that's a very good question, actually.
Yeah, so there will be an investor report on a quarterly basis, minimum. If more things happen that we want to inform or we feel that we need to inform the investors about, it will happen. But I think the most important part of the question is indeed, are we informed of every piece that is being bought? Yes and no. And there are many reasons why it's a yes and a no. The yes is, yes, you will know how many works are bought, of which segment of the acquisition of the basket, as Liz just called it, right? Is it emerging artists that have been bought, a mid-career artist? Quite often we will also mention the name of the artist, but there are also reasons sometimes not to even name the artist. The reason is, if we are investing your money and we want to make sure to get a very good return, we don't want anyone to know what's in this art fund. It's very important for the art market. Many of these pieces are not, most of the pieces will never be bought at auction, so nobody will know that we have bought them. When they're bought from a dealer, just a very small group of people will realize that we have bought the piece. And we want to make sure that it stays that way, because art that comes to the market that hasn't been on the market for a while always fetches a much higher price. But rest assured, you will actually understand at an attestation level, meaning this artwork has been bought in this price range. It has been seen by these people. It's bought because of this criteria. This is the growth potential we see in the art. At that level, you will be informed. And Liz and I were talking the other day. We actually believe we can reveal some artworks as well. And actually, the fund just acquired a piece of a rather well-known and very upcoming artist who just had a wonderful show in Miami. We will reveal that name eventually. We will not say which work though, but we will say we managed to acquire one of those works off market, equally important as the artworks that were in the show in Miami. So at that level, you will definitely be informed. And we're not holding information back because we don't want to share it with you. We would love to share everything with you, but it's definitely in the interest of the investor not to share everything, and make sure that what's in the fund becomes a mystery, even better. It's a mystery, and then all of a sudden the things will be sold and people will be intrigued.
And I can summarize as well in terms of generating alpha here from the two experts, right? There's a buy strategy and then there's a sell strategy. And I think this question actually encapsulates both sides that I can explain, and then you guys can correct me. The buy strategy, for example, with someone like Liz von Habsburg, who's been working and has a very good reputation with all these gallery owners, for example, is that a lot of times she can skip wait lists on in-demand emerging artists. And I think this is where Nanne got very excited when he shadowed her at Miami Art Basel, where she got the pieces that she wanted ahead of everyone else, and Liz and Nanne got very, very excited. So that's one thing that's when you have someone like Liz managing your portfolio and buying for you, it's akin to being able to get a Birkin out of an Hermes store ASAP. And you know what happens when that happens. So that's my layman explanation of it. And then the sales strategy on the other side is, for me, again, a layman explanation would be, I wouldn't want my house to be on sale with every agent out there for the next 2 years. This makes it not fresh. And basically what happens is that the value of it, right, will be not the same as if it were a fresh piece of art that just came out. So I wouldn't want my house listed with every agent sitting around for 2 years waiting for it to be sold. Is that a layman explanation?
Yeah, so I just made one. I made a small mistake though when I said when the fund will be sold. It will definitely not all be sold at the same time, right? Liz and the team are tracking nonstop what is a moment to sell. There will not be huge risk be taken. So when an artwork goes up in value a lot, it will be opportunistically sold.
Yeah, and I think two questions that other audience have asked in the past as well is that, will you recycle the funds once you have sold your art piece? And the answer is no, it just gets distributed. And then the second question is that will the art be also worked hard in terms of, being lent out, for example, to get dividends? And I think if it were to happen, then the dividends will be passed alongside to the investors directly as well.
Right.
I want to go back really quickly to the idea of selling works of art and what makes sense. And we know very well in the art market that one of the major levers in value is, as Elaine mentioned, freshness to the market. So if we are to let the market know exactly what we've purchased, they become no longer fresh. And what we're doing, and Nanne mentioned this, is we are using our investors' money, and so we're very, very careful how we talk about the works of art. But yes, you will know, which artists are in there. You just won't know the exact piece to keep it fresh.
And I think this gives you guys also an idea of what SDAX does, which is we curate our investment opportunities very, very carefully. We curate the people that we work with very carefully as well, because we all have to work together for about 6-7 months to get something onto our platform. And, you can see the quality of the people that we have here. And do we have any further questions? Very good to see you, Arun. Okay, anything else from anyone else or any anecdotes at all? I think one of the things that Jack might be able to tell you when he works with Elizabeth is on a yearly basis, the amount of art and previews that they have to go through in order to identify pieces of art. And this is where you generate alpha as well. Is it 45,000 previews that you have to go through?
We go through thousands of previews, and we go through these previews on an ongoing basis. We're doing this every single week, before every single art fair that happens nationwide, internationally, globally. That includes all the fairs in Europe, Art Basel Paris, Frieze in London, Frieze in New York, Art Basel in Hong Kong, Art Stage in Singapore, Singapore Art. And we're getting all of these previews from all of the galleries ahead of each of the fairs and ahead of each of their gallery exhibitions as well. And that is a tremendous amount of art that we are looking at. It's information that's extremely helpful. It really helps contextualize us and understand what is out and available on the market and where each of the artists are moving. Before Art Basel Miami, which was in December, we probably looked at over 500, 600 gallery previews. I can't even imagine how many works that was. That was a very large number of works that we spent 4 or 5 days spending the full day. Potential opportunities are, but it's such priceless data. Go ahead.
Yeah, no, we scrape data every single day. And we have the largest data set of, as I think Elaine mentioned, we have the largest data set of private and dealer transactions that exists. And that's really, really important when we're valuing works of art and when we're looking to purchase or to sell. Because the art market, as many of you may not know, is over 50% led by the dealers. So we think that the auctions are leading the art market. In fact, no, they're not. It's the dealers that are doing over half the sales.
Exactly. And then you compare that, or you add that to Nanne's data set, which is 45 million data points. And you basically develop and take in about 7,000 data points of art and collectible transactions daily, if I'm not mistaken. I mean, that amount of work with your team sitting in the Hasso-Plattner Institute. Can you tell us a little bit more, and then we can close out?
Well, Hasso-Plattner was very much the angel investor, meaning that he was not only giving money in the beginning when Artory started, it was in a way a joint brainchild. So his ecosystem of people who help him financially and how to invest money very much are aware of technology, because Hasso-Plattner is also the founder of the Hasso-Plattner Institute in Berlin. And that's sort of a topping school for tech people. It's one of the most renowned places in Europe where you can study technology. So initially, everyone working for us, Hasso said, when we start this company, the technology should be based in Berlin, and it still is. And many people working for Artory in Berlin are actually sourced from the Hasso-Plattner Institute. So that set the bar really very high if it came to technology in the beginning. Very, very privileged that in the early days of Artory, he was so much involved. And he's definitely still on the cap table. Hasso-Plattner Capital is still investing in the company. But I have to say, the way you talk about our data and Winston's data, to me, what I really find exciting about the joint venture is it's every level, right? It's Liz and I really feel that there's a lot of synergy. We trust each other. We've been working together for different parts of the art market for a long time. But at every level in the company, the same thing is happening, whether it's the data set or Jack talking to Pete or people from the two teams talking with each other. There's a huge amount of synergy, and that makes it really important and also a lot of fun.
Yeah, and over like I would say 2-3 decades that all of you guys have been in the art market. I mean, Nanne, you have been chairman of TEFAF, which is the European Fine Art Fair. You have been co-chair of Sotheby's. You've worked at Wildenstein. You were the junior curator to the Royal Dutch Royal Family. Liz, you've been at Christie's. I mean, Pete, you have been in Cambridge. I know you're muted. But the point is that associates, but the point is that, that world becomes very, very small. And so everybody does know everyone. So if there is, credibility, like, we know it, right? And this is why we're very, very excited to work with you guys at SDAX. And at SDAX, again, like this is what we do when we curate products onto our platform. They're institutional grade. We just make sure that, we make it accessible to everyone, because this allows everyone to get a foot into the art world, whether you're a collector or whether you're a beginner. The point is that it allows you to diversify as well, because it gives you, uncorrelated to markets. And at the same time, I think it's also about the passion and interest in art.
Hi, just before we sort of wrap up, can I there seems to be some unanswered questions. One is who decides when a piece is to be sold, and the second one is how often are we informed of the pieces that are bought and sold, and are investors informed of every single piece that's being bought or sold?
Well, that one we already covered, but
Yeah.
Liz, maybe who decides when a piece will be sold? That's an easy question, but it's good to answer, right?
No, it's very important.
Part of the sales strategy. Yeah.
Yeah, the sales strategy is important, and we didn't mention enough of that. As we mentioned, we buy off market, so we're buying either private or through dealers, so that we have the world at our fingertips, because we have the access that is unparalleled. We're looking for each of these works of art. We're watching their trajectories very carefully, and when we see that a work of art has gone up a certain percentage that meets our criteria, and we feel that it doesn't have any more steam to go higher, we will recommend that it be sold. Now we'll do two things. We'll go back to the dealer where we purchased it to see if they have a private buyer who is interested at that level, at the high level that we're looking for. And we'll also look at the auctions, because although we won't be buying at auction, when we sell at auction, a Winston Art Group is on 0% seller's commission at all the major auction houses because of the leverage we have in the market. So already you're saving anything on the seller side that is normally paid by a seller. In addition to that, and also because of our leverage in the market, we're able to get back for our seller a part of the buyer's premium that the buyer pays that's normally kept by the auction house. So that's an additional amount of money that goes back to the seller, i.e. the investors in the fund. And so we know that selling it at auction can be very beneficial. Also, the auction markets are marketing geniuses. So the auction houses, so we do special deals with them where they do very special marketing for the works that we're selling to the auction houses, and we are able to negotiate, as I mentioned, really incredible financial deals. So it's a really good option for works of art that we decide are not going to be sold back through dealers, but will maximize their value on the auction side. So we recommend those those works of art be sold. Then it's again the investment committee who takes a look at our reasoning, and then if they agree, then we'll put it up either at auction or sell it through a dealer. And then that money is redeployed to the investors.
And there's another question that says, when there is a disagreement, we have all those protocols in place. If anyone is interested in investing in the fund, you will get all the protocols when there is a disagreement, etc., etc. The chances are slim, but we thought about everything, which every other equity fund would do as well. So we make sure that, of course, when Liz and I all of a sudden get into a huge argument, that it's not the end of the art fund at all. But rest assured that won't happen.
Yeah, so I think exactly.
Since 1996, we've never had a fight, so I think we're pretty good.
Yeah, and Peter Lucas, the CIO of the fund, from Cambridge Associates, who's not allowed to speak today. He has actually quite a lot of mitigations on the fund itself. And on both sides, you will see from our art deck, the buy strategy, the sales strategy, that makes the difference, and that makes up the alpha for the fund. I think we're almost finished in terms of time here. If anyone else has a question, do raise a hand.
One more question I just saw come in, and that was, will we sell at a loss? And I'll tell you exactly what is good news for you is that we've done a lot of managed accounts for our clients in the past. So this is not public funds, but these are private funds for private individuals or families. And Pete can supply the information or the stats on our managed funds. We've never sold at a loss, ever. So rest assured that would happen with the fund as well.
I have a controversial question for Liz, myself, actually. Liz, what keeps you up at night?
What keeps me up are the bad actors.
I mean, you guys keep me up at night. I know that for a fact.
Yeah,
I mean,
it's called like this that keep me up at night, Elaine. No, it's the bad actors in the market, and not because I'm worried that any of us are bad actors, but it gives the market a bad reputation. So we're constantly promoting transparency and clarity in what we're purchasing and so on for our clients, so that they feel comfortable that what we're doing on every level is risk mitigation and is a wonderful, makes this asset class something that's wonderful to invest in.
And what about you, Nanne? What keeps you up at night?
I was hoping you would have another question for me, but what keeps me up at night? Well, yeah. What keeps me up at night, first of all, I'm a very good sleeper, so nothing really keeps me up at night. But what I can worry about when I walk out on the street is it's very complicated for people to understand how complex the art market is and what we've actually done to make it possible to navigate that market. And what sometimes worries me is, do people really understand that we've tried everything we could to make it a wonderful entry into the art market? Because I believe actually when you invest in this fund, well, I know for sure, you will actually learn a lot about emerging artists as well. I mean, I'm not a specialist in emerging artists, but I've learned over the last couple of months just by joining Jack, Liz, and the team to Art Basel is incredible. So there is a big learning curve, but we still talk to people who are telling us, oh yeah, but an art dealer told me that we should buy this artwork and it should be factualized. And I'm like, please, I mean, everyone is allowed to make their own mistakes, but we really try hard not to make those mistakes. And then it comes a little bit to what Liz said. If one of those other initiatives has big reputational damage because something goes completely wrong, it will reflect on our fund. And I sometimes think about that, of course. Yeah.
Yeah, and I think for Aztecs, I mean, one of the things that we like as well is actually first-time funds that are available to the public, not saying that first-time funds by fund managers, because Liz has been a fund manager to her clients for a long time. I mean, she does count like a third of the world's largest art collectors as her clients, on top of, powering the 5 top private banks in the world and 3 insurance companies. And Nanne on the other side, at the same time, I mean, you and your data science actually power the UBS Art Basel report. So that's, something that's a Bible of the industry. So for us on our side is that we actually like first-time funds like that, where there's already proven track record, but it's actually made available for the first time to to the public, where we think that the asset managers and especially people like Peter Lucas have to work doubly hard, because this is where they actually usually outperform fund managers who have been in the business, who's actually enjoying vintage 6 of their funds.